Here are the crypto top headlines covered in this video. The 2024 Santa Claus rally is about to start. Next, Bitcoin price all-time highs driven by spot volumes. Analyst says $115,000 is next. Also, avalanche of institutional money continues into crypto products with $3.2 billion in inflows, says CoinShares. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, the 2024 Santa Claus rally is about to start. There's potential for a 2024 Santa Claus rally across the crypto markets. Historical trends, market factors, and this year's bull run could lead to significant gains. You've heard of the halving and Uptober, but are you familiar with the other major calendar event when crypto is odds on to go up? Say hello to the Santa Claus rally, bringing good tidings and cheer to traders worldwide. If all you want for Christmas is a screen-busting green candle for all your crypto bags, this is the seasonal event for you. What's the basis for believing in a Santa Claus rally, and is there any reason to think that 2024 will live up to previous years? Let's examine the science behind this distinctively unscientific phenomenon. The case for a green Christmas. The Santa Claus rally, typically observed during the final week of December and the first 2 trading days of January, has historically brought cheer to investment portfolios, but its origins are much older than crypto, predating even the Diffie-Hellman key exchange in 1976 that laid the foundation for crucial pair cryptography. In 1972, Yale Hirsch coined the phrase Santa Claus rally in his Stock Trader's Almanac publication. Hirsch identified a pattern where the S&P 500 index tended to rise during the final December and early January trading days. This 7-day period has historically yielded positive returns, with the S&P 500 gaining an average of 1.3% since 1950 and as of 2020. Why is this the case? What's it got to do with crypto? Those are rookie numbers. Several reasons have been postulated as to why the stock market tends to perk up at the tail end of the year, ranging from the rational to the distinctly irrational. The boring explanation is that investors may be looking to invest in tax loss harvesting before year-end, selling underperforming stocks to offset capital gains, and reinvesting in the market. Alternatively, fund managers might purchase high-performing stocks at year-end to enhance the appearance of their portfolios in annual reports. A more benign suggestion is that with many investors on holiday, reduced trading volumes can lead to less volatility and a gradual upward drift in stock prices. This explanation can't be easily applied to crypto since the markets are never closed. Thus, due to its vital retail component, the holiday season is more likely to increase rather than reduce volumes. It doesn't automatically follow that less crypto volume automatically equates to greater volatility. The opposite is often the case, as bulls and bears attempt to pull the market in opposing directions. It's fair to say that most of the rationale behind the Santa Claus rally doesn't apply to crypto because, newsflash, crypto isn't stonks. Despite significant institutional participation over the past year, following the Bitcoin exchange-traded fund approvals, the industry remains more volatile than traditional markets. The 1.3% 7-day increase Hirsch charted in 1972 wouldn't register as much as a blip in crypto, where double-digit moves in a single day are the norm during bull markets, even for established assets such as BTC. One theory that applies to the Hirsch model works neatly with crypto. The festive season brings increased consumer spending and a general sense of optimism, which can positively influence market sentiment. People have gotten their annual bonus, are bored, and have time. It's the perfect time for a bit of speculation on the market. Why a crypto crimbo is on the cards. While the Santa Claus rally is a well-documented phenomenon in traditional stock markets, its presence in cryptocurrency is less clear. Cryptocurrencies known for their volatility and 24/7 trading don't always follow equities' seasonal patterns. A second trend can be applied to this model that has empirically proven a powerful predictor of a Santa Claus rally occurring in crypto land, whether or not the market is in a bull run. It's safe to say that the crypto firmly checks that box right now, thus making a compelling case for a severe rally coming together as the year draws close. In late 2017, for example, BTC rallied by 68% over the 2 weeks spanning the new year. Subsequent years have been more muted, in line with the prevailing market mood at the time. But then there's 2024, which has already broken all crypto records. One wouldn't bet against it closing out the year on a tear just to complete the clean sweep. If traders buy into the Santa Claus rally thesis, they don't need to create a prediction market to speculate on the likelihood, although nothing is stopping them. In crypto, financial freedom comes as a standard. A more intelligent strategy is filling one's conviction bags before the year end, load up on the assets you believe in the most, and then sit back and let the prophecy unfold. As 2024 closes out, the financial landscape presents a mix of optimism and caution. The global economy has shown resilience, with many sectors rebounding from previous downturns. Consumer spending during the holiday season is expected to be robust, bolstering market sentiment. The only potential dampener could be the escalation of global tensions in the Middle East or Ukraine. Still, barring a major macro event, there's every reason to expect the current bull market to remain intact. Even if the Santa Claus rally proves to be a damp squib on this occasion, it's no biggie. The bags investors have accumulated now are likely to stand them in good stead next year as the crypto market continues to grind higher. They don't have to leave a glass of milk and some cookies out, but there's no excuse for not being ready for Santa this Christmas. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin price all-time highs driven by spot volumes. Analyst says $115,000 is next. Bitcoin prints a new all-time high above $107,700, while several analysts call for much higher prices in the short term. Bitcoin extended its weekend rally on December 16th by setting a new all-time high above $107,700. The swell in Bitcoin's price comes amid a steady surge in spot volumes and the reemergence of the Coinbase premium in the U.S. session. Robust buying in the U.S. session followed by the explosive weekend price action, which saw a strong spot push on Binance and notable perpetual futures volumes on KuCoin on Sunday, December 15th, as traders pushed BTC's price through the $103,000 and $104,000 sell walls. In addition to the steady spot buy volumes, positive news flow about new Bitcoin purchases from MicroStrategy and Similar Scientific hit headlines at the start of the day. Similar Scientific purchased 211 BTC for $21.5 million at $101,890 per coin, and MicroStrategy acquired 15,350 BTC for $1.5 billion at $100,386 per coin. According to independent market analyst Willy Woo, more than $3 billion per day has entered the Bitcoin network over the past 30 days, a data point that highlights the bottomless appetite that market participants have for BTC at the moment. Robust daily inflows to the spot Bitcoin exchange traded funds are also a consistent catalyst in BTC's ascension to new all-time highs. According to data from SoSo Value, the week ending December 12th saw $2.17 billion in inflows to the ETFs, bringing the total net assets to $114.97 billion. According to independent Bitcoin researcher and investor Timothy Peterson, Bitcoin's price is most likely headed to $115,000 based on ETF fund flows. Our next top headline, Avalanche of institutional money continues into crypto products with $3.2 billion in inflows, says CoinShares. Digital assets manager CoinShares says institutional investors poured a record $3.2 billion into crypto investment vehicles last week. In its latest digital asset fund flows report, CoinShares says that last week, institutional crypto investment products saw net inflows that brought yearly flows to $44.5 billion, a new record. Digital asset investment products saw a continuation of inflows last week, totaling $3.2 billion, the 10th consecutive week, with inflows this year so far now totaling an astonishing $44.5 billion, more than quadruple that of any other year. Trading volumes in exchange-traded products, or ETPs, have averaged $21 billion a week, comprising 30% of the Bitcoin traded on trusted exchanges. Bitcoin volumes on trusted exchanges, all investment types, is highly liquid, having averaged $8.3 billion a day this year, double that of the Financial Times Stock Exchange, or FTSE 100. According to CoinShares, all regions internationally saw inflows to crypto. The United States, Switzerland, Germany, and Brazil led the charge with inflows of $3.1 billion, $36 million, $33 million, and $25 million respectively. Bitcoin products reached yearly inflows of $38 billion after last week's additional inflows of $2 billion. Altcoin XRP saw inflows of $145 million as hopes rise for a U.S.-listed ETF, while Polkadot and Litecoin saw inflows of $3.7 million and $2.2 million respectively. Ethereum products also enjoyed $1 billion in inflows. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.